Welcome to another episode of Personal Finance 101. In this podcast, we aim to educate our listeners so they can make informed decisions. With me, I have my co-host Ronnie, and together we run a family practice where we provide independent financial advice to our individual and corporate clients. In today's episode, we cover our top financial tips for business owners. There's no doubt that being your own boss comes with a lot of advantages, like increased potential for income, flexibility of time, and being the master of your own destiny. However, running your own business also comes with quite a lot of risk. Like they say in South Africa, sometimes you have to risk it to get the biscuit. Another consideration is the current economic environment, which makes it even harder for business owners, and it puts them under even more pressure. Smart business owners take the time to understand their risk and mitigate it as far as possible. This includes everything from insurance to tax, even to succession planning. Ronnie, will you please explain to our listeners the top 5 considerations for business owners so they can best plan to succeed with their business?
Yes, of course, Justin. I think many of the holistic financial planning principles that apply to the individual just takes the next level up for the business owner. There's basically 5 main principles we're going to have a look at today. Planning for disaster is obviously the first and more scary one. Ensuring that your future sustained success of your company so that your company can survive over time during the tough periods as well. And then, of course, planning for your own retirement. Hopefully you can retire a little bit sooner than your mates that work for the corporates. And making your company financially robust as far as possible so that it can withstand difficult times financially. And then the last thing is obviously, and I think perhaps the most important, is attracting good staff. Because if you surround yourself with good people, then your business will be in a good space. When it comes to the practical application of this, there are a number of things to consider, as well as the importance of keeping one's books in order, paying the taxman, assuming the business is running smoothly and you have production that's ticking over. There's a reality of life. Life happens, and a myriad of things can go wrong. You have to ask yourself, what happens? Am I covered for theft? Am I covered for business interruption? Well, these days, whether it's power or whether it's staff that's not in a position to work on that particular day, is there flooding or fire, any sort of natural disasters that affects your business? Am I covered for cyber attacks, which nowadays we seem to have obviously increased because during COVID, a lot of online practices has seen the light, and at the same time, the more you are online, downloading apps and downloading your upgrades and the rest of it, the cyber risk becomes a lot higher. So it's important to find out if something happens to your business, if somebody decides to sue you, make something known on social media, Hello Peter, or one of those platforms where you could actually pick up a bad reputation. It's important to make sure that you have a plan in place to counter that sort of negativity. If you're in a position where your business needs to collect fees from clients, you have to make sure that your debtors department is in place so that the collection and the process for people not paying is in place, and that your cash flow is not adversely affected by bad debt. So it's quite important to then have that system in place. On the short-term side, there are quite a few examples of products that protect the business. We can start off with something like professional indemnity insurance. That is really in place so that the professional, when he is sued, whether it's a surgeon or whether it's a professional person that has made a human error, they must be in a position to pay the client or at least have insurance in place to be able to fund that claim. So it's important to make sure that you don't use your reserves. It's probably cheaper to rather insure risk than to use reserves. You want to rather use your reserves to extend your business instead of using that to cover risk. It's a lot cheaper to use an insurer to cover the risk for you as opposed to using your reserves. Commercial insurance is quite important for the business owner, whether it's there to protect your equipment, to protect your furniture or any of your fixtures in your office. And then, of course, when we look at vehicle insurance, whether you have a fleet of vehicles or whether it's just your company vehicles, we understand that if we look at the figures, it's quite staggering that over 11 million people driving on our roads, less than 30% do actually have insurance. That means 70% of people are driving out there, increasing your risk. So it's quite important that the company has cover for short-term insurance, at the very least have third-party insurance, which covers at least the other party should you not be in a position to cover your own cost. Okay, it's quite important to cover the risk up front so that you don't wait until the risk becomes an issue. Many people think that, I'm not going to insure this because we'll just cover the risk. And then suddenly something happens and they have to take out a huge amount of money and they haven't really planned for the risk. So part of sitting down and planning your business, you should actually chat about the risk and then make sure that that is covered. Justin, won't you explain to the listeners how succession plan is a very important part of planning for the possibility that something goes wrong in a business, whether it's a family business like ours?
My one client, when we took it over, not only did we save money, because they insured it themselves. So there was vehicles and there was equipment that wasn't insured. So it's also important to make sure everything's on the policy. So when we took it over, we ensured that that is insured, and they actually had a claim on one of the vehicles that wasn't insured previously.
Yeah, I think it's quite important that you realize when you insure a vehicle, for instance, that you look at the detail, because let's face it, the devil is in the detail. If you have quite an expensive vehicle, it's important to even insure the smaller things like the dents and scratches. And fortunately, there are nice products out there that you don't need to wait for a big accident before you can claim. You can literally make sure that your vehicle is well maintained by having smaller packages and details of insurance like dents and scratches. At the same time, if you have a client that has a delivery vehicle, it's important to make sure, guys, what are you delivering? Are you a sound engineer? Are you traveling with expensive equipment? Are you a construction guy? And as far as possible, make sure that the visibility of those equipment is not that, first of all, it's locked if it's in the back of a vehicle, and if there are windows, for instance, that those windows are either tinted or filmed so that they cannot see the inside of the vehicle. That would actually create a situation where you'll have less claims and where obviously the client doesn't create more risk for himself by parking in an open space and everybody can see the equipment that's in the back, and therefore also creating a bigger chance of theft or anything like that. So those are the details that are quite important to point out to the client, to say, listen, we are not just insuring a vehicle with this model and that price. It's also, what are you using the vehicle for? Are you taking clients out? Are you exposed to personal risk, or are you transporting anything? So therefore, it's not just about price, but it's about detail and what you want to insure. Justin, I think we can move on to succession planning and why succession planning is important in a business, whether it's a family business or whether it's a couple of partners that are in the same business.
Perfect. Thanks, Ronnie. So succession planning is planning for the long-term future of your company. Have you ever thought about your company's future if you're not there, perhaps beyond your own lifetime? Planning for a sustained future success of your company requires succession planning to be put in place, and it refers to a business strategy of passing leadership. So when you pass leadership, your employees and your people at the end of the day is the most important. For example, if you have a key individual that's in a manager position who has been with you from the start, from day one, and this person moves on to another opportunity, becomes sick, or even passes away, your business is exposed to a risk. Or what if you yourself get into a car accident and now you're recovering and you're not able to work from where you're recovering? You need to plan for these things, because obviously your own life is important, but the business also has a life that needs to be sustained when these risks occur. Insurance becomes important when businesses and individuals experience some kind of loss, and no loss is more acute than the business owner. This is where insurance comes in the form of contingent liability to cover major debts, and also to cover buy and sell agreements and key person insurance. Now, buy and sell agreements are very important. This is a legal contract to establish when, how, and at what price you sell the share of your business or acquire your partner share of the business. Perhaps you want to sell the business when you retire, or you want to acquire your business partner's share. This needs to be put in place in an agreement. Sadly, making deals over the power of a handshake is not realistic. Buy and sell agreements formalize these deals, and buy and sell policies fund these deals. Creating value by growing business is the retirement strategy for most entrepreneurs. This brings us to the topic of retirement. Ronnie, will you fill us in the options that business owners have when it comes to retiring?
Thanks, Justin. Yeah, it's quite important to look at retirement. And when you look at a business owner, there's a reason he's taking the risk and he's not working for corporate. He wants the flexibility of time, and he wants to retire sooner than later, and with obviously more wealth than just working for a boss. In this particular case, when you're looking at retirement, you can look at the tax benefits, which is quite important, and either structure your own retirement annuity, or within the business have a pension or a provident fund. That would have enormous tax benefits for yourself. We find that a lot of business people will create a lot of income, and they will probably be in a higher income bracket, which puts them in a higher tax bracket. Now, if you don't do proper tax planning by structuring either your salary or looking at a pension fund or retirement plan, you are going to run into trouble with the tax man. So it is quite important to make sure that you have retirement planning in place. And as a business owner, that is a very strong part of your financial planning. The company will obviously have to be in a position to fund either your salary, which you use to fund the retirement, or they could actually contribute to the full or portion of that retirement funding. It's quite important to realize that when you're doing retirement planning, the products are structured, and that's the way that SARS has actually been helpful. It's not only tax deductible, but even in the sense of your estate, you'll be in a position that whatever group benefits you have for retirement would be excluded from your estate. That means that you're not paying tax on their tax or estate duty on retirement products. And that is actually an excellent way of doing estate planning, to make sure that you're not only planning for your retirement, but if your spouse or your partner is in a position that you have been working for 40 years for an institution or for your own business, and you've built up a nice retirement package, and that goes onto your spouse or partner, then they will also receive the tax benefits of the tax-free portion. Justin, just give us a few ideas of how we can make our business, or how any business owners out there can make their business more financially robust.
Sure thing. Yes, there's a lot business owners can do. And the most important, I would say, is your people, retaining your employees. A good way to attract and retain good employees is by offering group benefits. This includes anything from group retirement benefits. So this can be group retirement annuities, pension fund, provident funds, and that come together with group risk benefits that include disability, life insurance, trauma cover, even education protector if something should happen to the family, so that the children can still go to school or even go to tertiary education. It also includes funeral cover. These are the things that employees find very valuable and make them think twice before leaving your employment. It gives sustainability to your company, having employees that stay with you for a long time. And we all know that high employee turnover is one of the biggest expenses for business. So employee retention is one of the best investments you can make in your company.